Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in the recent 2-3 weeks, we have really great discussion concerning the gold role and its place in a modern, difficult world. And we have tried to bring some foundation to our position why we think that demand for the gold market should stay within the few years more, and gold will really keep its value in a chaotic situation in the global economy. This is, let's call it as the managing chaos. So, because we think that the pandemic, the geopolitical tensions, and breaking of the supply chains, this is the parts of the same chain, and it is managed process. It's not occasional. It's not a self fluctuation of these moments of these factors stands on the market. This is managing process and pretty controlled process that has the specific targets. And with this modern world, as a pandemic should last at least for a couple of years more, we think that gold should get the support, and sometimes this support will be not expected, especially what stands in terms of the rate policy, whether it will be sufficient or not, whether the Fed will be able to keep it announced hawkish policy or not. So lots of uncertainty stands around it, and how situation stands right now, it seems that even interest rate rising to the 2% from the Fed, it might be not enough to control the inflation that stands in the market, and it's really still a big question whether the Fed will complete this, because some initial rate change and moving it somewhere to the 1.8%, that's already could make the negative impact on the economy. And this really could bring the situation when rates will be not sufficiently high, but negative impact on the economy already will take place, which put the Fed in a difficult situation where it needs to keep the growing of the economy. At the same time, it has to somehow control the inflation. And this is the combination that just will be perfect for the gold market when the interest rates still will be near the zero. I mean the real interest rates. That's really could become really a great time for a gold market. That's our view. In the shorter term, we're considering some minor pattern by far, since market is keeping higher, moving higher and taking out of this top. Mostly we're talking about the follow time frame chart and shortest pattern, and we're mostly watching currently for this A, B, C top pattern. So on a daily chart, I do not see some real problems. So our initial entry around 618 support based on the 3-drive pattern that has been formed a couple of weeks ago has worked perfect. Second entry that we have discussed last week on retracement to the conference support also is done well. So on the 4-hour time frame chart, guys, market is challenging the neckline, which is important, and we're waiting for reaching of the COP target, which is 1822. It means that if you haven't taken a position here or maybe here, currently it would be better to not trying to jump in right here, but wait when the market will show a response to the COP target. Probably this also will be the 618 resistance. So if we'll take a look at this, it's probably somewhere this level will be also the 618 resistance level. Some maybe even agreements will be. So let's put it here. So for considering taking the new long position, it would be better to wait for response and retracement from the COP area. Just give you better entry price and better combination of risk reward ratio. So right, indeed, you can see it's very close, 1823, 1829. So that will be some kind of an agreement resistance where market theoretical should show some bounce, at least retesting of this previous top and retesting of the neckline. So on the hourly chart, the grabbers that we have discussed in a weekly report hasn't led market to the taking out of these lows, although minor retracement still has happened. Anyway, market stands now with some ways channel to the upside. Here you could see another target calculation we could apply with this retracement, 127 extension. You could draw it as a butterfly if you want. Anyway, it has the same destination point, 1822, which perfectly agrees with the COP on a follow time frame chart. Once the target will be reached, then you could keep an eye on the possible levels here. Most probable that will be somewhere 1810 or 18 even. This is two levels that you might consider for position taken, depending on how price will react on the resistance and what the pullback we get. In general, if we take a look also at interest rates, you could see that it stands relatively friendly to the current performance. So here, guys, if you remember previously, we have discussed this possible Gartley steeple to sell. That was the reason, by the way, why we thought that the grabbers might work. But currently, you can see that interest rates start falling, although the overall action is not very fast. But in general, this stands in minor downward action, which is supported to the gold. It means that instead of this pattern, we could get the butterfly. For instance, something of that sort. It might be if market will keep going lower, and as you can see, there will be some extension that also could let gold market to complete the upside targets. So that's our opinion. It means that currently on the gold, since we already have the long position, we do nothing. Just keep the position with the stops at the break even. Those who would like to take the position, we think that it would be better to wait for response on the COP target and not trying to buy right here, because it will be just safer. So that's our current view on the gold market.